From how Netflix did better and worse than expected, to fresh headaches for Elon Musk at Twitter and Tesla. This is the week in numbers. First up, over 8% was the plunge for Netflix shares following its latest results. Though the streaming giant added more subscribers than expected, revenue fell short of hopes. Netflix says moves like a crackdown on password sharing should pay off later in the year. Just 0.8% was the growth in China's economy over the previous quarter. That was way down on the expansion seen in the previous 3 months, raising fears the country's recovery could be fizzling out. Beijing now faces mounting pressure to do more stimulus. 466,000 was the record number of cars delivered by Tesla over the latest quarter. But shares in the EV maker sank after boss Elon Musk said he'd do more price cuts to drive demand. Fort Pitt Capital senior investment analyst Brian Jankowski says firms like Tesla and Netflix are facing a reality check, but not a crisis.
Investors kind of gave them a pass in the first quarter in terms of their results, and a lot of it was market performance was driven by hype. So now we're kind of seeing, do these numbers meet up with the hype? And I think in the case of Netflix and Tesla, they both were underwhelming.
Almost 50% is the drop in advertising revenue at Twitter. It's the latest sign of difficulties at the social network following its takeover by Musk. The billionaire has slashed costs, but says ad income isn't bouncing back the way he expected. And 60% was the drop in quarterly profits at Goldman Sachs. That took them to their worst in 3 years. But shares in the Wall Street Titan rose after Chief Executive David Solomon said he saw signs of revival in investment banking.